Will rising crude oil prices hurt oil companies and boost green energy and EV stocks? It's not that simple. So, what is the reality? Crude oil prices and green energy and EV company shares often move in the same direction, but not always. The next question that comes to mind is why does that happen? And what does crude oil actually have to do with EV and renewable energy stocks? Allow us to break down this surprising connection. The current US Iran conflict is a textbook real time example of this paradox. Crude oil prices crossed $100 a barrel after the US Israel attacks on Iran this month. Leading green energy shares such as GE Vernova rallied 32.23% this year to date. It was up 6.72% in the past month, and NextEra Energy, up 15% this year, have outperformed the S&P 500. Solar Edge jumped nearly 10% in a single day on March 10th, but broader markets worldwide declined amid high energy prices and inflation-related concerns. So the basic relationship between these sectors, which are at opposite ends of the energy spectrum, is straight. When crude oil prices rise, it makes petrol and diesel cars costlier to run. This tends to make EVs look attractive, and as a result, electric vehicle stock price rises. In contrast, when crude oil prices fall, petrol cars become more affordable. Cheaper car fuel reduces the urgency to switch to EVs, and EV stocks tend to decline. Simply put, we can say crude oil price is like a thermometer for assessing the EV urgency. But there is another paradox for EV makers like Tesla. Lower oil prices make mining of energy-intensive materials like cobalt, lithium, and copper cheaper. As prices of key EV raw materials come down, it helps in boosting EV companies' margins. So paradoxically, falling oil prices may impede EV demand but potentially boost EV makers' margins. Let's come to green energy shares. Green energy like solar and wind does not compete directly with oil. But when oil prices are high, the urgency narrative around renewables gets stronger. Thus, high crude prices may boost green energy shares. It is important to note that other factors such as government subsidies and interest rates affect green energy stocks more than oil prices do. For example, during 2020, oil prices rebounded nearly 150% from approximately $20 a barrel in April to $50 a barrel in December. The iShares Clean Energy ETF, ICLN, too rallied more than 200% between April and December 2020. At the time, expectations of a major green energy policy push from then US President Joe Biden was said to be one of the key reasons. Meanwhile, in 2022, oil prices rose due to the Russia-Ukraine war. But the ICLN ETF dropped that year due to factors including high inflation and interest rate hikes. So be alert, because oil prices alone do not tell the whole story. Download the Dealing.com app to invest in global stocks, subscribe to our channel, and follow us to know more.